The modern economy runs on something most people cannot see: debt. Almost everything around us is connected to it. Homes are bought with it. Businesses grow because of it. Governments rely on it. Even money itself is often created through it. For most people, debt begins as a solution, a way to move forward faster. Without debt, buying a home could take decades. Education might remain out of reach. Starting a business could become impossible, so borrowing becomes normal, expected even. At first, the system feels helpful. Banks offer loans, credit becomes available. Opportunities seem to expand. But over time, something deeper begins to appear. Because debt is not just borrowed money. It is a future obligation. Every loan pulls a piece of tomorrow into today, and tomorrow must eventually pay the price. When a person takes on debt, their future income is already partially claimed. Month after month, year after year, payments continue. Sometimes for decades. For many people, debt quietly becomes part of daily life. A mortgage payment, a car loan, student debt, credit card balances. Individually, each one may seem manageable. But together, they form a system that ties millions of people to long-term financial commitments. And this system extends far beyond individuals. Businesses operate on borrowed capital. Expansion is often funded through loans. Growth is accelerated through credit. Governments themselves borrow enormous amounts of money, not just occasionally, but continuously. Public spending often exceeds revenue. To close the gap, debt is issued, year after year, decade after decade. The total amount grows larger with time. And yet, the system continues functioning because modern economies have evolved around debt. Growth is often driven by borrowing, where credit leads to more spending, where spending leads to more economic activity, at least for a while. But debt has a unique characteristic. It compounds. Interest accumulates over time. Small obligations can grow larger if left unresolved. And across an entire economy, this dynamic creates pressure. People must keep earning. Businesses must keep expanding. Governments must keep managing their obligations. The machine must continue moving, because if the flow of income slows down, debt becomes heavier. Payments remain the same, but the ability to pay weakens. This is when cracks begin to appear. In history, many economic crises have started this way, not from a sudden shock, but from a slow buildup of obligations that eventually become too large to sustain. Yet the system rarely stops using debt, because debt is also what fuels growth. Without borrowing, expansion slows. Opportunities shrink. Investment becomes cautious. So the system continues forward, balancing growth and obligation, opportunity and risk, creation and repayment. For individuals, debt can be a powerful tool. For economies, it can drive enormous progress, but it also creates dependence. Dependence on constant movement, constant growth, constant income. Because in a debt-based system, standing still is not neutral. Standing still can be dangerous. The machine must keep moving, and as long as it does, the cycle continues. Borrow, spend, grow, repay. Then borrow again, quietly shaping the structure of the modern economy. Welcome to Econ Noir.